All right, guys, you know I don't like to be bearish, but of course Bitcoin is crashing right now, back down to 86,600, touching on 86.5. And of course, this is getting back to our current lows. And we really would like to protect these lows if we are going to have any type of chance at a dead cat bounce, or maybe even continuation to the upside. Now, if we take a look at my calls here, of course, I've been doing a pretty good job. Back at Alpha Commission, I did give the call to the upside here at 17,000. Not 15,500, right? But 17,000, pretty reasonable based upon patterns, based upon EMAs, based upon momentum, a lot of different things shifting in the charts that suggested that was a great opportunity to take a chance at the bottom of the market there on Bitcoin. And I've been calling for Bitcoin season, Bitcoin all the way to the upside, where I did give another call when I became an owner at AR Collective, somewhere around 60,000. Became an owner somewhere in this area. We still had pullbacks, and I started to look for opportunities as we reached this region. A lot of this was based upon a theory that I made that we were starting to put in a golden parabola here to the upside. And so as we retouched that parabola, I did give another call, which suggested upside momentum could be flipping somewhere here around that 78K level. Now, that ended up panning out. And of course, I was looking for a similar entry as we started to head into the golden parabola once again around that 113 area, where I did give the very specific warning that if we breached 113, we're going to have to go into risk management mode. And if we ever breached 107 in particular, we would be in pure capital preservation mode. I did give a figure around 109, where you should start thinking that way quite heavily. And I suggested to the group that I would be focused on risk management under 109, but 107 was really the kill switch here for our group. And hopefully a lot of people took those warnings, as we did violate the golden parabola to the downside, because as you can see, the rest is history. We've basically retraced our entire last long position. We are coming into support off of bullish order blocks here. And if we take a look at where we ended up, you know, why am I still looking for opportunities? Well, this market does have a backup. It has a trend to it. And this backup trend, you know, doesn't start at the Pico bottom. You know, that would take us quite deep here in a bear market. But it is a kind of a kind of middle ground in this market. And I'll show you what I mean. Take a look at our bounces, okay? All of our key bounces have really been along this trend line. You know, if we just discount the bottom of the market where maybe momentum had to shift from bearishness into our uptrend really got established here on this higher low, somewhere around that mid-20s. And if we can just take a look, you can see that inside of this zone, we put in that bottoming structure that has led to every single pump in the market. And currently, we're in that zone once again. So you guys are going to have to forgive me, right? The perma bull, right? For looking for opportunities in this area, even though I gave the call, right, back up at 113. I just sounded the alarms. I gave the red flags, and then I called it. I called the game over here on the exit call underneath 107, at least for this move. However, because we still have a higher low on the macro, low, higher low, higher low, higher low, once again, potentially another macro higher low, we can't really say that the market is over. Just this particular move was over. And so until we really significantly breach 75,000, there's still a chance. Okay, right? The meme, right? So you're telling me there's a chance comes into play. And if we do just zoom into this area here, we can see that currently we are basing off of a 382 pullback. Now, guys, for those of you who use fibs, you understand the 382 is a bullish pullback, all right? It's not as bullish as the 236. That shallow pullback would have been a good sign. If we could have built up bullish structure up there, it would have suggested that A lot of players were re-entering the market. But when you consider this entire market, we're really in the shallow fib zone on the pullback of the entire market. And so while it looks like, right, it appears like we're retracing this entire move, in reality, we are just having a shallow pullback off of the entire market. And until we breach the 382 and start, putting bearish pressure on the 0.5, it's very hard to call game over. In fact, this is where we would expect, parabolic action to continue if it is going to continue. And guys, I mentioned that I would talk about the two reasons why we're retracing today. One, of course, is that the new CEO of Strategy, right, which is Michael Saylor's company, formerly known as MicroStrategy, has suggested that the company would, in fact, sell its Bitcoin if its MNAV values got too extreme. And, that's just a ratio of the value of its assets versus the value of the company. And so they have certain responsibilities, right, to their shareholders. And so they suggested that they might have to sell. They're not saying that they are selling right now, but the market takes that as a bad sign because, of course, if Strategy and Michael Saylor are willing to sell their Bitcoin, then anyone could be willing to sell their Bitcoin. But guys, we already know that. Okay, that's how markets work, right? Buy low, sell high. So, what do we expect, right? For this to be like a permanent religion, we shouldn't have to rely on kind of religious views of Bitcoin in order for this market to function. And so I think it's perfectly fine that Strategy has this perspective on its board because that's regular business. And we need regular business in crypto, okay? We need to get rid of the kind of psychopaths and narcissists and whatnot. And we need to get on board with regular business and prove ourselves as an industry. So I find this to be a good development, but it does kind of just put out there risk while we are already down, okay? And, whenever you add that kind of negative message in a downtrend, it can accelerate some of the nervousness and some of the jitteriness in the market. And so we are seeing that pullback. Now, the other issue that we're facing this weekend, of course, is the yen carry trade unwind, right? And so if we take a look at, the Japanese policies through the Bank of Japan, typically speaking, they've been the money printer and the buyer, and they've basically just infinitely money printed in their country, way more, maybe twice as much as the United States has, and they've bought a lot of US assets. I'm going to just dumb this down as much as I can, okay? And so now as they're changing their policies because of the repercussions of this very loose policy that they've had, ever since basically the end of World War II, there's a real risk that they may have to sell US assets in order to fund their government because they are one of the biggest US asset holders. Why are they one of the biggest US asset holders? It's because their policies of being so easy on their own assets meant that you can't get a return from them. And so the only way the Japanese could get a return is by buying US assets, which were very safe and could create a solid return, okay, for Japan. But if they have an economic crisis, then they may have to sell those US assets. And because it's been such a long period of this, they own, maybe trillions of dollars worth of US assets. And that unwind could severely disrupt US markets. If US markets get disrupted, we could expect downside, and not just downside, but perhaps extreme downside, like financial crisis downside. And that could be just a reset on the entire market, having nothing to do with crypto, having everything to do with risk. And of course, these multiples that the banks put on every asset, as they're kind of leveraging themselves to high heaven. It's just There's a ton of risk out there. And of course, crypto is a big part of that leveraged risk. All of it is just, leveraged up to the eyeballs. Okay. Not just crypto, but traditional financial assets as well. So those are the two big issues that are threatening the market right now. And if we take a look at this pattern, yes, it started out as a golden parabola, and this would have been awesome. If we could have just, jumped off of the golden parabola, maybe we could have tagged that 150 level. But as it happens, of course, for various different reasons, we did break down. And, once we did break down, we created a new pattern. Effectively, this is a broadening ascending wedge. These things do have a measured move to the downside. We could easily see this market fall into a bear market that eventually does base somewhere around 40 to 60K. I'm just kind of eyeballing it right now. We really have to see how does this price action develop over here, because we may not even get that breakdown. As long as we are in this uptrend, we still have the opportunity to start reclaiming some levels, especially above 95K and then above 100K. And if we're able to put structure in above 100K, where we do have some pattern targets pointing us in that direction, then just like we got this bounce right here, just like we got this bounce right here, just like we got that same kind of bounce right here, and also that same type of bottom, that same type of bottom, same type of bottom, same type of bottom, same type of bottom. If we're able to just repeat this, okay, in the face of all of this bearishness, then there is the potential that we get that V-shaped recovery and maybe even an overthrow, perhaps to this 130 area, where I would suggest that, of course, we are entering a pretty critical zone, and it would take some, fairly wonderful news to get us back up, to those original targets of maybe 150 and beyond. Not sure what would get us there. Really, I think it would be super realistic to just take every bounce, maybe to, mid to upper 90s as a chance to de-risk. Should we get into this 110 area, there's a good chance to de-risk. And should we get back to our all-time highs or into that 130 area, it's also a good chance to de-risk. We want to be super realistic. We want to preserve our capital. Guys, don't forget my trading rules. Enter on strength, raise your stop loss, cut losses fast. You don't have to hold these bags, okay? And skim your profit when you get it, because you never know if things are going to turn around rapidly. Guys, we are having a sell just for the Cyber Week. And if you want to join the conversation, go ahead and take a look at the link in the description of this video. We've got a sale up to 65% off. I know a lot of you guys are hurting. Maybe you guys need a discount, but I do think that this market is moving down so fast that if we do get a full reset, it's probably going to be shorter than what people think. And then there could be tremendous upside if governments around the world come in, and rise to the occasion and decide to turn that ship around, because it's in their interest to do so. Remember, they almost always come to the rescue. And how do they do that? By infinitely money printing. If they're going to be infinitely money printing, what assets does that primarily benefit? Maybe gold, maybe Bitcoin. Take a look at this trend. It hasn't been so bad for us, guys. Okay, it's only been bad if you've been in the wrong kind of altcoin. A lot of altcoins did extremely, extremely well this cycle. 20xing, 10xing, all sorts of numbers like that all over the place. But it's just for a limited time, okay? Don't forget, skim your profit, right? And if your chart starts turning around on you, cut losses fast. If you want to learn to trade the alpha way, go ahead and join me in the group. Guys, I'm always available to you. Thanks for listening. That's your alpha for the day. Stay safe. Happy trading.